Hour. The WBBM Noon Business Hour continues. Shares of Netflix are trading higher today as the streaming giant beats earnings estimates despite a miss on subscriber numbers. Joining us now with the latest is Tim Hanlon, who is the founder and CEO of the Vertere Group based in Chicago. Tim, welcome back to the program. This is the final quarter in which Netflix can report earnings before the serious competition kicks into gear. That's because Apple and Disney, their streaming services go live next month.
You bet, Rob. It's clearly the pressure is on Netflix, and they admitted as much yesterday in their quarterly call. Their subscriber numbers are still growing, but certainly not at the pace, the torrid pace that it's been over the last number of years. And they, admitted as much yesterday by saying, look, we understand that there's going to be competition. And I think it's a smart move to kind of, I guess, recalibrate what growth expectations people had for Netflix as a stock as Apple TV and Disney Plus in the next month or so. And frankly, even next year with Peacock from NBC and HBO Max from Warner Media, this is all a crush of brand new and very formidable content offerings at different pricing and different sort of marketing approaches. But Netflix at least recognizes it. That said, Netflix is still gargantuan by comparison and has a lot of levers to pull on their behalf going forward.
Disney, of course, just has the intellectual property. They have Star Wars. They have the comic book movies. And I know Twitter had a lot of fun on Monday when they were tweeting out Disney Plus, all of their titles. And that includes the dogs that were released in the 70s after Walt Disney died, like $1 Million Duck and the computer wore tennis shoes. That's also part of the Disney Plus catalog. Apple has this expensive series called Morning Show to anchor their service. What will Netflix have when this is all over?
Well, they won't have the black hole from 1977, also another dud from Disney.
Right.
But again, this is all about content and libraries of content. And all of these players, with the exception of Apple, but arguably Apple could probably buy their way into getting some of these libraries as well. That's a lot of what, Netflix's sort of strengths have been born on has been that of libraries, and they've aggressively tried to pivot towards spending a lot of money on brand new content, things like Stranger Things and The Irishman from Martin Scorsese coming out next week, et cetera. But all these libraries are really now reverting back to their original owners and producers in these new services, and that's really, I think, the real question mark that a lot of people have going forward. The fact is that Netflix has to build, if you will, from scratch their own content libraries, while all these others can literally just open the doors to the vaults and start mining them. Well, and that's going to be a very interesting comparison going forward.
Well, thanks for joining us this afternoon. Tim Hanlon, founder and CEO of the Vertere Group based in Chicago. Someone in America is going to sign up for Disney Plus because they can get the movie Gus about a mule that can kick field goals for a football team.